Google has lost over 500 billion in market cap. It went from a 2.5 trillion market cap company to less than 2 trillion. That is a lot of value erased from one of the world's top tech companies, and it all happened within a few weeks. Google is the cheapest stock out of the Mag 7 by far, yet it has better finances than others in the group. This was a big reason why I bought such a large amount of Google recently due to this dip, due to its great valuation and fundamentals. We're going to talk about all of this. Now, I will say a lot of people want me to say probably Alphabet because that's the main parent company and then all fall underneath its umbrella, but nobody says Alphabet, so we're just going to use Google. First off, I do have to say there was some big news with Google this week. They made their largest acquisition in history by agreeing to buy cybersecurity company Wiz, an Israeli startup, for $32 billion in an all-cash deal. And that will be finalized by sometime next year if it goes through. Now, Wiz specializes in cloud security powered by AI. This acquisition will make cloud security easier, more accessible, more intelligent, and democratized so that more organizations can adopt and use cloud and AI securely, something many companies worry about today. So this will ultimately speed up adoption and generate more revenue for Google. I like this deal and think it will position Google to compete more with Microsoft and Amazon. Now, the stock did dip almost 5% after this announcement, probably due to the $32 billion price tag on top of their already $75 billion capex spend they announced and plan to do in 2025. So Google, let's just put this in perspective. They brought in almost $73 billion in free cash flows last year, and in Q4 alone, they brought in nearly $25 billion in free cash flows. So they can pay for this Wiz deal in about a quarter and a half. So they should be able to utilize their free cash flows to fulfill this deal on top of the $75 billion commitment in CapEx. Now, this is the benefit in investing in a company with high free cash flows. They can acquire companies and invest in emerging technologies that will grow the business and its future, thus leading to great gains for investors. Now I want to talk about what I see Google as currently as a business and where I think they're going in the future and what the business will mainly be about. So current Google, the main thing that Google's business is currently centered around is advertising. I think we all know that, as 3/4 of its revenue is from ads. Now, they are heavily investing in AI around that $75 billion for 2025, and you bet that is to enhance and protect its ad revenue. So they're building a wider moat here with their ad revenue. And I am not really concerned at all with this part of their business, and we'll talk a little bit more about it, but this is the current Google. It's all about the advertising and that revenue that comes in from ads. Now, future Google, they are also heavily investing in AI currently to grow their cloud computing infrastructure, in which Google is in a solid third place behind Microsoft and Amazon with a 12% market share, and they went up 1% year over year in that market share, the only company out of the three to gain market share in 2024. This part of their business will help diversify their offerings and make them less reliant on ad revenue, and that's what I want as an investor, more diversified revenue. And so far, Google is growing this cloud section of their business unit very fast with rising revenue of 30% year over year. Think of it this way. Many companies will not spend the money to build and buy its own data centers. Rather, many companies will be renting the computing power and run workloads on the cloud. And this rent is what these top 3 cloud computing infrastructure companies are after and why they are investing so much in AI. I think Google will be very successful in this area, and that will equate to massive amounts of revenue in the future as well as growing profits. Now, so we have the current Google with ad revenue. We have the future Google with the cloud and the AI becoming more and more part of their business. But there's other benefits to investing in Google. First of all, there's YouTube, the leading streaming player in the US based on viewing time. So think of that. More viewing time than Netflix, more viewing time than Prime Video. That is pretty awesome to hear, and not a lot of people would have thought this would have been the case earlier on, a year or 2, 3 years ago, when Netflix was all the rage. But it's YouTube that's coming in first with viewing time, and their ad revenue was up 14% year over year to $10.5 billion. Now, the brilliance with YouTube is that the content is created by the content creators, reducing upfront costs for YouTube that others like Netflix have to put up to create content. So YouTube should continue being a great and profitable part of this business. And really, I thought about it myself. I'm pretty sure I watch YouTube more than Netflix as well, and I bet you do too. Let me know your thoughts on that and where you think your viewing time is going towards. But I think YouTube's probably a top contender for most of you. And then lastly, I want to mention another part of this business I'm bullish on, and that's Waymo and its autonomous driving technology. I think this segment is one that has huge potential. Waymo has facilitated more than 4 million passenger trips in 2024 alone. They are the only autonomous ride-sharing business out there currently that's beyond the testing phase and expanding city to city. Think about that. It was not Tesla to do this first. It was Google with Waymo. That is fascinating because nobody would have thought that either years ago. So they're just really doing a good job at being first to market. And that's where they have that competitive advantage, is by being the first one to that market. And I do have friends and family that have been in a Waymo Robo-Taxi, and they said it was a very positive experience. And I would try it too. It gives me a little bit of the nerves, being that others said it's really comfortable. They didn't have any fears. So I would try it. So long term, I think Waymo will be the leader in this autonomous driving space. And overall, I see it as Google operating with a steady and solid advertising business with the huge upside of AI and cloud computing. And that is why I'm buying Google today. As many out there, they don't see it this way, and they're missing a great opportunity due to their fears surrounding Google. One of those fears is the Department of Justice wanting to break up Google, forcing them to sell their Chrome browser. It looks like Trump may continue to push for this breakup. It came about during the Biden administration, but Trump seems like he still wants to do that. So while this is something not to be ignored, we do know Google will fight this action through the courts, but even if it is forced to break up, Google may be worth more broken up than it is as one big conglomerate, as many would see it as the slower segments as one company and the faster growing segments, Waymo and cloud, as another business, and that would demand a higher multiple. And that's something that, hey, I think I would like that too, right? Let's focus on the part of the business that's growing faster. Another fear is AI competition regarding chatbots and virtual agents coming after Google's search business. This has been a big one, and I'm not going to lie, it was a big fear of mine too earlier on, but I don't have that fear no more. So I'll say this. Google is aggressively integrating advanced AI capabilities across its product suite, especially search. This will improve user engagement, satisfaction, and monetization. And look, Google is still the dominant search engine. Yes, other rivals like ChatGPT can cut into their market share a bit, but that does not mean Google search revenue won't keep growing. Google is still likely to be the winner given its long history of search data, scale, and ability to monetize its ads. And AI, in fact, should give it the opportunity to monetize a large portion of the search results it currently does not serve ads for, which is around 80%, as it introduces new ad formats to profit from AI. And then upstarts like OpenAI's Search GPT and Perplexity AI, meanwhile, just don't have the same scale and decades of search history to build upon. At the same time, they don't have the reach to profitability to serve ads to a vast number of users. Thus, they both lose lots of money, unlike Google. And none of that will likely change even with any government remedies. So multiple advanced AI models can grow in users and revenue simultaneously. It's not a situation, in my opinion, where one or two will grow and the others will sink. It's just that some will grow faster than others. So my fears here have reduced dramatically, as I am confident in Google's search growth and profitability, as well as their AI offerings. Now let's talk about Google's valuation, because it's dirt cheap. With an 18.6 times forward earnings, Google is much cheaper than the S&P 500's 21.2 times forward earnings. And regarding the Mag 7, Meta is the next cheapest at 24.4 times forward earnings. So Google is also trading at 5.9 times sales, lower than its historical price to sales ratio of 6.04. So really, it's a great company at a bargain. One of the other main reasons why I bought. Now, investors have had extreme fear with Google and have sold it massively, but I think those fears are way overblown, and Google is now an oversold stock with high upside potential. And again, Google boasts strong finances, a healthy ads business, and a robust AI strategy. Considering this company's strong fundamentals and low valuation, I bought big time. And just looking at some of its financial metrics, revenue, it's growing year over year like clockwork. Net income, it's growing like clockwork. And long-term debt is going down. These are all moving in the right direction. We already talked about free cash flows. Those are growing as well. And analysts, they see an upside potential of 32.65% in this stock. It's really not in the buy range, but it's close with analysts. But I will say this, you always want to take analysts with a grain of salt because they change their mind constantly. But I think this is absolutely a buy. And I think it's a buy at 175 or below. And the lower it goes, the more I will add. Now, here's my portfolio, and there's Google, my new stock. Yes, it's down over 3.5%, but that's because it's a new stock. There's going to be ups and downs with this, but long-term is what I'm betting on, and I think I'm going to be a big winner here. And you will see there is an absence in the bottom right of a stock that I did sell out of, but that'll be in the next video because I want to pair it up with another topic. So, do you share the same outlook with Google as I do? I think it's a very mispriced asset, and I am taking advantage of it, and my hopes is that it will pay off big time. So that's all for today. Happy investing, and we'll see you soon on Mark Arnold's Finance.